Today, we will talk about hanging man candlestick definition and tactics. A hanging man candlestick occurs during an uptrend and warns that prices may start falling. The candle is composed of a small real body, a long lower shadow, and little or no upper shadow. The hanging man shows that selling interest is starting to increase. In order for the pattern to be valid, the candle following the hanging man must see the price of the asset decline. A hanging man represents a large sell-off after the open which sends the price plunging, but then buyers push the price back up to near the opening price. Traders view a hanging man as a sign that the bulls are beginning to lose control and that the asset may soon enter a downtrend. The chart shows a price decline, followed by a short-term rise in prices where a hanging man candle forms. Following the hanging man, the price drops on the next candle, providing the confirmation needed to complete the pattern. During or after the confirmation candle, traders could enter short trades. The example highlights that the hanging man doesn't need to come after a prolonged advance. Rather, it can potentially mark the end of a short-term rally within a longer-term downtrend. The hanging man and the hammer candlesticks look identical. The only difference is the context. The hammer is a bottoming pattern that forms after a price decline, while the hanging man occurs after a price advance and warns of potentially lower prices to come. One of the limitations of the hanging man, and many candlestick patterns, is that waiting for confirmation can result in a poor entry point. The reward can also be hard to quantify at the start of the trade since candlestick patterns don't typically provide profit targets. There is also no assurance the price will decline after a hanging man forms, even if there is a confirmation candle. Here are two key takeaways. 1. A hanging man is a bearish reversal candlestick pattern that occurs after a price advance, warns of potentially lower prices to come. 2. The hanging man pattern is just a warning. The price must move lower on the next candle in order for the hanging man to be a valid reversal pattern. Hope this would help. Thanks for watching.